Did you know that Elon Musk, the CEO of Tesla, recently sold Tesla stock once more? It no longer feels surprising to see Musk's name in the media or on any social media site. For a variety of reasons, the millionaire businessman's name is once again widely circulated in the media. Remember this information: Elon Musk, the CEO of Tesla, has sold $3.95 billion worth of Tesla stock since finishing his acquisition of Twitter late last month. Since the Tesla CEO struck a deal to acquire Twitter for $44 billion, there has been much anticipation for Musk's 19.5 million share Tesla stock sales. Since the announcement of his deal to acquire Twitter earlier this year, Musk has sold blocks of Tesla shares valued at a total of $15.4 billion. The transaction occurred only a few weeks after Tesla's third quarter earnings of $3.3 billion and $1.45 billion, which fell short of Wall Street's estimates and sent the stock down 4% for the day. Although Tesla's value has decreased by almost 46% this year, Musk still has a net worth of just under $200 billion. Musk acknowledged that he was clearly overpaying for Twitter at the time of the outcome. Get an additional 10 cash right now, create an account, and fund Mumu with any amount. As a limited time bonus, it honors Mumu's 10th anniversary. Take a look at the following link. Mumu is an excellent stock trading platform with lots of special user-friendly features. Many of you will likely find it extremely beneficial, particularly if you wish to take a more active role in your finances. Determine the best timing to buy and sell stocks, for instance. In the description below, there is a link. Twitter revealed that Musk purchased the social media platform on October 27th, but he didn't begin selling more Tesla shares until November 4th. Earlier this month, he also sold blocks of Tesla stock, according to documents submitted to the Securities and Exchange Commission. The CEO of Tesla and its single biggest shareholder both said that he was finished floating the stock, but the filings still stand. In April, Musk declared there were no more deals in the works. Afterwards, in August, he reiterated that it was crucial to prevent an emergency sale in case he was unable to secure new equity partners and had to conclude the Twitter acquisition. It's unclear at this time if the funds Musk raised were used for Twitter's acquisition or to offset the company's losses since he assumed leadership. Following his takeover of the business, Musk revealed that Twitter had experienced a sharp decline in revenue as an increasing number of advertisers stopped spending on the network. He attributed the decline in advertising revenue to pressure from activist groups on advertisers. It's important to remember that Twitter lost $270 million in the quarter that ended on June 30th, well before Musk assumed leadership, and that advertisers started to leave. As of June 30th, its cash position on the balance sheet was only $2.7 billion. According to Dan Ives, an analyst at Wedbush Securities Tech, Musk's 2 weeks as Twitter's owner have been nothing short of spectacular. Ives stated that the more involved he gets with Twitter, the more of a quicksand-type situation it becomes. In essence, after attempting to leave the social media platform for months, Elon Musk carried out his takeover in October. Beyond the approximately $13 billion in debt obligations made by Wall Street banks, it's unclear exactly how the $44 billion purchase was eventually financed. A number of well-known people made promises to invest almost $7 billion, but it's unclear if they followed through on their commitments. Furthermore, Musk has never disclosed to the public how he intended to obtain his portion of the funds required to complete the deal. After everything is said and done, what comes next? Now that Twitter is losing money, it will have to pay about $1.2 billion in interest each year. Several significant businesses have stopped running advertising on the network since Musk assumed control, giving them time to observe how the billionaire manages the platform's changes. According to Loop Ventures' Gene Munster, Musk appears to be bracing himself for Twitter's continued decline over the coming year. When the stock sales went public, he was getting ready for Twitter to turn into a money pit. After making dramatic cuts to expenses and reorganizing the platform's operations, Musk caused 2 weeks of turmoil at the social media company. In reality, Musk let go of half the employees, then asked some of them to return. Some staff members are unsure as to whether they are still working there. Some Tesla shareholders are also concerned that the CEO is overextending himself and that he will need to sell even more of his stock as a result of the deal. Based on data from Bloomberg, he still holds around 14% of the company. Roughly half of the $36 billion worth of shares that Musk has sold have done so since he made the Twitter purchase proposal public, according to statistics collated by Bloomberg. According to the Bloomberg Billionaires Index, Musk's wealth has decreased to $179.5 billion from $340 billion at its peak due to the fall in Tesla's stock. the richest individual in the world. Elon Musk currently owns over 135 million Tesla shares due to low sales and issues with the supply chain. Experts say that now is not the ideal time to sell Tesla shares, which have lost 46% of their value this year. After the deal to buy Twitter completed, Musk received an average price of $202.52 for the Tesla shares he sold. This is a 10% decrease from the closing price. It's no secret that established automakers like Volkswagen, Ford, and General Motors are becoming more and more competitive with Tesla in the electric vehicle market. Some investors are worried that Musk's acquisition of Twitter will divert him from paying enough attention to Tesla's issues. Dan Ives stated that the never-ending Twitter albatross is aggravating Tesla investors. Musk needs to take a hard look at himself, get off this never-ending Twitter roller coaster over the Tesla narrative, and return his attention to the company's golden child Tesla, which now more than ever needs his time. At Wedbush, Daniel Ives stated, "We were afraid going into the last days of the deal that Musk would have to sell more Tesla stock to fund the disastrous Twitter deal, and ultimately those fears came true, which speaks to some of the massive selling pressures on the stock of late. Musk, who has declared he has done selling Tesla stock several times in the last year, once more loses trust with investors and his supporters in a moment reminiscent of the boy who cried wolf. The majority of Musk's wealth is invested in Tesla stock." According to Forbes, Musk's personal net worth decreased below $200 billion following the sale of his Tesla shares, but he is still the richest person in the world despite having sold 9.5 million shares of the company 7 times this year. 445.6 million shares are still owned by Musk, according to SP Global Market Intelligence. This gives him a 14.1% ownership stake in the 2003 firm he co-founded that manufactures electric vehicles. He continues to be the stock's largest single owner as a result. This implies that Musk maintains greater financial control over his business than do many other tycoons. Jeff Bezos, the creator of Amazon.com, owns just 9.8% of the business, while Mark Zuckerberg continues to own 13% of Meta, an expensive job this year. Many people think that Musk's sale of Tesla shares is a typical stage in the development of a business. Currently, large institutions hold about 42% of Tesla's equity. The majority of these proprietors are conventional managers of investments. Just 15.6% is owned by people like Musk, who owns the great majority of it. Oracle founder Larry Ellison is the only other significant individual investment. Public investors, including state pensions, hold the remaining shares, making up 41% of the corporation. It is rare to find activists like D.E. Shaw working for Tesla. The truth is that D.E. Shaw holds a mere 0.1% of the stock, and for that reason Musk maintains control even while he is selling. However, investors continue to bemoan Musk's sale despite this. Even though Musk may be cutting back on his Tesla holdings, massive mutual fund and ETF investors are piling in. The Vanguard Group is the second largest Tesla shareholder, with 204.7 million shares of Tesla, or 6.5% of the firm, owned by the massive investment company, which also happens to be the largest owner of most equities. 2 of the top 5 ETFs with the most Tesla shares are managed by Vanguard. 19.3 million shares are owned by the Vanguard SP500 ETF, while 17.6 million shares are owned by the Vanguard total stock market. Additionally, the ETF with the 4th highest percentage exposure to Tesla is managed by the investment manager. Approximately 16% of the Vanguard consumer discretionary ETF's portfolio is invested in just one stock. Vanguard has been purchasing these ETFs in large quantities in order to meet their demands. Compared to 2 years ago, its holdings in Tesla stock had increased by over 58%. Next is another industry titan in the ETF space, BlackRock, holding 166 million shares of Tesla, or 5.3% of the company's outstanding shares, is owned by the corporation. After the Spider SP500 ETF Trust and the Invesco QQQ Trust, BlackRock's iShares Core SP500 ETF is the 3rd largest holder of Tesla stock. Additionally, BlackRock is actively adding Tesla shares, just like Vanguard. In just 2 years, the number of shares held has increased by about 46%. In general, experts disagree over Musk's decision to sell his Tesla stock. To receive future updates on Tesla stock, make sure to subscribe to this channel.